What's going on with SPX6900 right now? The chart has been under pressure for a long stretch. Sell signals keep appearing on the higher time frames, and yet some people still argue this thing is somehow undervalued at these levels. How do those two views even sit together? Let's talk about it. It's still in the conversation because of the strong community culture, the long-running satirical narrative against traditional finance, the multi-chain presence, and the simple fact that pure meme tokens with dedicated followings continue to cycle in and out of attention. If this is useful, hit the like button, subscribe if you haven't already, and leave a comment with your honest take on SPX. I actually read them. Looking at ratings and signals, a lot of the technical scanners and community sentiment have leaned cautious to outright negative for an extended period. You'll see a mix of hold and sell readings, especially from tools that track the longer term trend and the position relative to key moving averages. Funding and open interest in the derivatives markets have flipped around, but the short term outlook from pure chart based sources remains defensive until price can reclaim and hold above recent resistance levels with convincing volume. There is more coverage for SPX 6900 than for lower ranked memes because of its ranking and community size, but the consensus from technical and sentiment tools has stayed measured rather than strongly bullish. SPX 6900 is a pure satirical meme coin built around the idea of flipping the stock market. The name plays on the S&P 500 ticker SPX combined with the internet meme number 6900, and the community's running joke is that this token will eventually surpass the entire traditional stock market in market cap. There is no formal utility, no product roadmap, and no expectation of financial return beyond the cultural and community narrative itself. It launched as an Ethereum token and has since bridged to other chains. It currently ranks near the top 100 by market cap, with a circulating supply close to the 1 billion maximum, and the price has been trading near the levels you're seeing after a sharp decline from previous highs. On the technical side, the bigger picture remains a clear long-term downtrend from the much higher levels reached during previous meme runs. Price has spent extended periods making lower highs and lower lows, with recent action testing support near multi-month levels. Short-term bounces have occurred but have consistently failed to reverse the larger structure. Momentum indicators have been mixed to weak on the higher time frames, often hovering in neutral to oversold territory without producing strong sustained recoveries. Moving averages on the daily and weekly still lean bearish, and volume has been relatively subdued outside of occasional spikes. Short term, it feels more like a weak consolidation or bounce inside a larger corrective structure than a clean trend reversal. You can argue there is some resilience when price holds the recent lows, but the overall structure still looks heavy. That's the classic trap setup. The culture is real and the narrative is unique, but the market keeps assigning it a lower valuation while attention stays elsewhere. Retail often gets caught here. Buying the community and culture will eventually matter argument, while the larger trend remains downward or sideways. Here's the real debate. Is SPX actually undervalued at these levels, or is this a value trap after a large post-run decline? One side points to the dedicated community, the long-running satirical narrative, the multi-chain liquidity, the distance from previous highs, and the idea that pure cultural memes can re-rate sharply if attention returns to the sector. They argue that if the community stays engaged and broader meme risk appetite comes back, these levels could look reasonable in hindsight. The other side says look at the chart and the market structure. Many meme tokens that peaked during strong cultural runs have struggled to hold value once attention faded. Volume and momentum have been soft for long stretches, and the market has consistently treated SPX as a lower priority name despite the size of its community. Nobody knows which way this resolves. The chart is still fighting the community narrative, the project continues to maintain a dedicated following, and the market remains selective about which pure meme stories it rewards. So the real question is simple. Is this the kind of project that can finally break out of its long underperformance and re-rate higher? Or are we just watching another established meme settle into a prolonged period of low relative interest while people argue about valuation? Short term, the picture still looks more consolidative and reactive than impulsive. You need to see stronger volume and a clean break of the recent resistance cluster before the short term bias flips with any real confidence. Longer term, it comes down to whether SPX 6900 can convert its community culture and satirical narrative into sustained demand and relative outperformance for the token. That's the only path that turns these levels into something more constructive instead of just another extended consolidation or grind lower. Bull case versus bear case is fairly clear. Base case, broader market risk appetite returns to memes, the SPX 6900 community stays highly engaged, the satirical narrative catches another wave of attention, and price manages to reclaim key resistance levels and start building a higher base. In that scenario, you could see a meaningful recovery toward previous intermediate highs over a longer horizon. Worst case is the opposite. Volume stays muted relative to peers, relative performance continues to lag, and the downtrend simply grinds lower toward new cycle lows. In that scenario, the undervalued talk just becomes background noise while price continues to underperform. Risks are meaningful, volatility is still present and can be extreme for meme assets. A broader risk of move in crypto or continued rotation away from mid-cap memes can pressure the price further. Downside remains open if the recent support zone breaks and the downtrend simply continues. Retail traders love the long-term flipping the stock market story and end up holding through multi-month or multi-year underperformance. Liquidity is solid relative to pure micro caps but still thinner than the very top names, so larger moves can still happen quickly. There's also the structural risk that comes with any pure meme. The narrative has to keep generating new attention or the token simply fades relative to the broader market.